Ba ba ba. Check 1 2. Check 1 2. All right, we're back with the Mortgage Bro Science. That's the MBS. I cleaned my whiteboard, but you know it's going to be up here. All the docs you need and our label. Let me grab my HP12C. So it's Mortgage Math Monday. I can't stress this enough. You just saw my short. Just auto debit all of your debt. Do not have that much debt. 1 or 2 credit cards. Hopefully you don't have a car payment. If you do, auto debit that. All right. That's my tidbit. Here we go. All right. So I'm going to show you again so we can hammer this home. And it's going to be repetitive and redundant, but I need to engrave this just like auto debit into everyone's minds. All right. We're going to do a 30 DTI, a 40 DTI, and a 45 DTI. What is DTI? That's debt to income. When you buy a house, you're going to have your front end ratio. That's your housing expense, principal, interest, taxes, and insurance. But then you also have your other debt, your car payment, maybe credit cards, maybe student loans. Hopefully no student loans. All right, we'll try to keep it realistic and provide those student loans. So I had to erase that so I could put the variables over here. All right, so here's what we're going to do. All right, you're going to have a salary. Let me write this in green. All right, because salary is money. Money, money, money. All right, so you're going to make 100 grand a year. Okay. What's 100 divided by 12? 83333333333. All right, so divide by 12 gives you your gross monthly. Okay. From here, you take your gross monthly and multiply it by 0.3, 0.4, and 0.45. All right, and this is how we're going to work it. All right, so I'll just put a point here just to make it easier. All right. You're going to get the result of that, and then you're going to less all your debt. All right, we're going to estimate homeowners insurance. Okay, we'll subtract that, say it's 150. You know, property tax, prop tax, not prop like propeller. Shout out Boat Busters. Okay, 500. All right, and then we'll say you have a car payment, and I'll leave it at that. Not even any student loans. All right, you got a full ride somewhere. You got a full ride, you're doing well. So let's just say another 350 in student loans. All right. Now from here, I just get out my HP12C and I see how much I can qualify you for based on the back end ratio DTI. That's your payment with the only debt we have in play here is a student loan, not even a car payment. Okay. So you take 100. You're going to divide that by 12. All right. 833333333333333. All right. From there, take it 0.3. That's 30%. Now, 30% of your gross monthly is $2,500. Actually works out real nice. So all your debt cannot exceed $2,500. Okay? Now, we're going to estimate homeowners less 150. Property taxes less 500. And your student loan less 350. Okay? Actually, I didn't even check the rates today. That's how good of a day I'm having. I just mowed the lawn. I didn't even check the rates. Let's just say oil's come down. We got a peace deal in the works. It is June 15th. Let's just say we're at 6.25 on a 30-year fix. All right. So then you have 1,500 remaining. That's your payment, PMT. Then you're going to take 6.25 GI. That's monthly interest. And then you're going to take 30 GN. That is your term, 360 months. Okay. Then you hit PV. All right. That means super comfortably, we'll write this in red. At a 30% back ratio, you could travel, you could do whatever you want. You can take your wife on all the dates that you want. You're going to want a mortgage of, it's 243 and change, so I'm just going to say 245. All right, let's round up here. You're like, oh, Mr. Ryan, I can't get anything for a loan for 250. I'm like, well, I agree with you. But what you could do is put more down as opposed to taking 250 and then divide that by 0.8, right, for a purchase price. Change colors here. Purchase price of $312,500, okay, which means you're only putting what, 60 down, 0.20, yeah, 62.5 down plus closing costs, call it 72. All right, you can still buy a $400,000 house, but just put enough down so your mortgage is $245 on a 30-year fixed. All right, because you really, I'm telling you, just because a bank's going to give you this, and I work at a bank, just because we're going to give you this, I don't feel good about it. Now there are circumstances if it's just you on the loan. And your fiance, your girlfriend, if you're not married, don't go on a note together, all right? If she's going to live with you, she's going to split the rent or pay utilities, do the groceries, cooking, cleaning, all the good stuff. And I mean that, all the good stuff that you don't want to do, that's fine. Go a little higher. But if it's just you, you're a single guy, single gal, really try to hit home that 30. Okay, I mean it. I really do. I just don't want to see anyone fail. I don't want to see you going to default. And again, the layovers aren't over yet, right? 2026. We'll see this keep going until like 2029. I'll get into that. That's gonna be a fun video. All right. So same rule applies here. All right, you make 100 racks. These variables hold true. What would that be? That would be the dependent variables, and the independent variable will be your back end ratio, right? I believe that's right. We have 100 divided by 12 times 0.4. That leaves you with 3 to get you to a 40 back ratio. Okay, take out estimated taxes and insurance. I already know the math. It's 650 less, and then take out 350 in student loans less. That leaves you with 23 for just principal and interest. All right, so then you hit payment, PMT, and then you hit 6.25, and then you hit 30G9. All right, PV. So that brings your mortgage. All right, again, this is your mortgage up to 378. Now you're thinking, holy crap, 378 versus 245. That's a whirlwind of a difference. I agree with you. I really do. But that's tight. That's 40% of your income is going towards debt. At the end of everything, you might only see 70%, depending on where you live, 70%. Just call it 65% of your gross monthly. That leaves you with 25%, just say 30% to live off of. All right. So you really, that's actually 378,961. So let's just call it 380. Let's just round up a little bit. We're always rounding up. 380, which puts you at a purchase price of, what is that going to be, like 510? Oh, 475. It's not that bad, actually. 475 is doable. That's like on the low end of the average first-time homebuyer home, right? You might have to sacrifice where you want to live, right? Maybe the school district kind of sucks right now, but due to gentrification and affordability, everyone's got to move there anyway, so it could become a really nice school area. All right, so at a 40 DTI, these variables, this is a home. If you had to, I guess you could, but I'm telling you, stick with 30 DTI. And then this is a scary one. I'll try to hold this marker here. All right, let's do 833,333 times 0.45. That leaves you with 3,749.99. Let's call it 37.5. Okay, so you're at 37.5. Okay, 37.5 to cover all your debts. We're going to take out taxes and insurance. Estimated. Remember, estimated. If you're going to go higher, your taxes could be higher. So keep that into account. This is where it gets risky. You really don't have room to play here. You really don't. I promise you. All right, and then take out your student loan of 350. Now you're at 27.5. All right, so you get 20. That's your remainder. You're going to hit PMT. Your rate, 6.25. GI. Term, 30-year, 30 GN. Present value. Now you're looking at a loan of 446 and change. Let's call it 447. All right. So we're at 447. Okay, which puts you at a purchase price of 0.8 divided. 558.75. 558.75. Okay. Obviously, everyone's like, that's a place I want to live. That's going to be turnkey. It's going to be beautiful in a better area than what would a 30% back ratio do for me. But I can't stress this enough. Auto debit everything and really don't max yourself out. Now, like guys like Dave Ramsey, he's going to say do a 15-year. But that 15-year payment is going to be astronomical. So, I recommend either doing a 7-year ARM or a 30-year fixed. And then you could probably set up biweekly payments depending on the lender or bank that you choose. Wink, wink, go to a bank. They probably offer biweekly installments. But you could always set that up yourself and auto pay half of your payment per month. Now, what this is going to do is at the end of the month, your interest is compounding on a little less than it would have sticking to that schedule. So it changes based on how much you borrow and your rate. But they say if you do biweekly payments or pay half of it before it begins to compound at the end of the month, you go from a 30-year fixed to anywhere from a 20 to a 23-year. All right. So the math's pretty constant there. So there's super easy ways to pay off your mortgage early and still qualify for the home that you want. I mean, again, let's just we'll have some fun with it. I'll say this is the danger zone. Danger zone. We're going to say and then we're going to say God level. This is really where you want to be at. Some practices that people follow are they like to make their mortgage payment, right? Say, all intents and purposes, you just get paid biweekly. So you get paid every 2 weeks, right? Not semi-monthly. So 26 paychecks. All right. You want your mortgage payment, just your mortgage payment, to just be one of those paychecks. And that's a decent rule of thumb because in reality, it's not totally accurate because it's gross, right? But then one pay stub is going towards paying your mortgage. You're good. And the rest goes to utilities, having fun, groceries, car payments, all that good stuff. All right, now that math doesn't actually hold true because you want to do exact math, but it's a good way to look at it. And yeah, because it'd be just under, because it's 26, but there's 12 months, all right, in a year. So just under 45%. So again, danger zone, don't do a 45 back ratio DTI. People do it. FHA lets people go to 57%. It's absolutely nonsense. Don't trust the government. If you have to, you do qualify for a substantial amount more, but try to go 30 back ratio DTI. You won't regret it. This is Ryan at the Mortgage Bro Science. Where should I write that? MBS. 30% back ratio. Just listen to me. Explore the arm. Like and subscribe. Thanks.